let's bring back our speakers on stage for the Q&A session. Please, speakers, please feel free to have your camera on. Great. Yeah, so we received several questions. So the first question is to Louise. Have we or are we going to go past the point of no return in terms of battling climate change?
There's not a single point of no return. There are sort of several tipping points, if you like, along the way, various things that can happen, and then we can't go beyond that particular stage. I mean, you know, you get a big ice cap melting and you can't, it's very, very difficult to refreeze that ice cap. It's certainly not something we know how to do in any reasonable time frame, but there are, so there are several things like that. There's ice caps, there's ocean currents, there's all sorts of other things that you can't undo once they've been done. Are we going to go past all of them? No, I hope not. But, you know, you can be very pessimistic and think, well, look, things look really bad. And it's easy to do that. It's very difficult to be very optimistic and say, oh no, we're just going to get out of this. There's going to be some magic technological silver bullet, which nobody knows what it is yet, and actually we can all go back to life as usual. But if you know anything about it, it's very difficult to do that. But it's going to be somewhere between the two. And what we can always do is we can always work to make it less bad than it might be. So there's always hope that you can make it, that you can improve things, that you can make things not as bad as they might possibly be. So there's not a single tipping point.
Yeah.
So no, we're not completely doomed.
Yeah, okay, great, thank you. Yeah, so we are, if we can take our actions every day to kind of make the climate change has less impact on us, then that would be good.
Yeah, but just a really important point here. It's a trope of a lot of interested parties, such as, for example, the oil majors, and various other people, to say that it's everybody's individual responsibility. Mm-hmm. Individual action is not going to be enough. There has to be societal action, there has to be governmental and policy action. So don't get suckered into thinking that it's all your fault. It's not all your fault, it's society's fault. And yes, it's your fault as a voter, potentially, but again, that's not an individual thing. So yes, we can as individuals make a difference, but the way to make the real difference is to get a policy changed. We can't get where we need to get to just by everybody, you know, reducing their miles they do in internal combustion engines. That's a good thing to do, but it's by no means enough.
Okay, yeah, great. Thank you, Louise, for your answer to this question. And the second question is to Dominic. How would a claim from a previous transaction affect the premium charged to the seller for a new transaction?
Very good question. It's unlikely to have an impact, in my experience, on pricing. The impact would filter through in one of two other ways. If the insurer, when we approached them in the MBI process, was aware that the client had a history of making significant claims that it thought to be, you know, out of the norm, and it concluded it was more likely to be mine to make claims in the future, then that could potentially have an impact on the insurer's appetite to quote for the transaction in the first place. So it's not that it would alter the price it would charge. I don't think. It's just a question of whether it would even be interested in offering insurance. I guess the other point is it will always be one of the questions that the insurer asks during underwriting. Once it's been appointed for the transaction, it will ask a series of underwriting questions of the prospective insured. One of those will be, you know, have you made a claim in the past? And if a client has, I mean, that's not necessarily a problem. I mean, obviously, the purpose of taking these policies out is in part to pay out for a valid claim, and valid claims do arise, and insurers do pay out on valid claims. So You know, we all recognise that that's a fact. If there were a significant history, perhaps of claims that weren't substantial, meaningful, proper ones, or that perhaps the fact they've made a lot of claims might give some concerns as to the due diligence processes that client has run in the past when considering the transaction, then at that point it might have an impact on the scope of coverage offered by the insurer, you know, in relation to specific points. So bottom line, I don't think it would affect the pricing. It would be more a question of whether the insurer is interested in quoting in the first place, and if they are quoting, the scope of the coverage offered.
Okay, great, thank you. And so the next question is to Clara. Do you see the different flavors of ESG or SDG investing converge? What will potentially drive this convergence?
I think I go back to my initial statement. ESG is a subjective concept. There's no one way of thinking about what is the right way to achieve ESG objectives. So I see the different forms of investing kind of fitting in with different beliefs and philosophy from the investor level. I think there are investors who are more interested in looking at ESG from a purely financial consequences. So how does it impact on the future financial impact of the companies, and they're quite comfortable with that approach. They don't necessarily feel the need to go for a full impact investing. There are also companies that are looking at more impact focused investing. They may go for more SDG flavors, and we also see clients that are slightly more at this stage looking at climate only focus. There's so much for insurers to think about at the moment. You know, I think they almost have to think about one thing at a time, and the top of the agenda is really figuring out how to deal with climate first, and then the others will come through. Will they converge in the future? Perhaps. I think it's an evolving framework. I think we're still at the beginning stage of working out what it all means, how it should be measured. And while SDG is a very convenient framework for measuring impact in a almost a standardized, consistent way that you can communicate with different people across the industry. You know, I think I'll have to say, take a wait and see approach to see whether they will converge.
Okay, perfect. Thanks, Clara. And the next question, I think, is for both Louise and Clara about climate change. And the question is, climate change might have an impact on both asset or like in the liability side. In your view, which side will be more affected by climate change?
It depends, okay? So if we succeed in achieving the Paris goals, for example, and if we do that through what's called an orderly transition, the impact will probably, okay, so the impact on the liability side comes mainly through the effects of climate change itself. The impact on the asset side comes partly through the physical effects, but mainly through the transition effects. So if we have a good orderly transition, we will get some impact on the asset side and a lot less impact on the liability side. If we have what's called a disorderly transition, where basically we leave it very late and then everyone scrambles to catch up and things, in a sense, nearly go horribly wrong, but they especially nearly go horribly wrong very much on the asset side, almost certainly. If we don't have a transition at all, so if we fail, if you like, if we have much more climate change than is desirable, there's going to be huge impacts on both assets and liabilities. And it's worse than that. It's probably going to mean the complete disappearance or potentially radical rethinking of the whole insurance industry. There's a quote going round from the chief executive of, and I've just slipped my mind who it was, it could have been AXA. It was one of the big ones beginning with A anyway. I know that doesn't help. To the effect that a 4-degree world is uninsurable. Okay, so if the world is uninsurable, then what happens to the insurance industry? You can't talk about it having an effect on the assets or the liabilities.
Okay, what about you, Clara?
I tend to be focused more on the asset side, so I'll probably have slightly more view on investment. I think it's fair to say that it has a huge impact on both sides. I think that there's so much redesign of strategy, so much thinking being done at the moment that it's already happening. The impact, it's already, it's going through all the discussion at the board level, is going through all the strategic planning. It's all, everyone's trying to work out what their carbon emission look like in their portfolio and how it may change in the future and how they can change it going forward. I think I would agree with Louise that if it doesn't work out, I think the liability side will be more affected. I have slightly more comfort, I believe, on the investment side, because I've seen so much planning already happening now, partly because it's regulatory driven. There's a strong regulatory requirement to do all these assessments up front. So there's a little bit more of a thinking around this, which I think is a good thing. But yeah, I think when it comes to being able to manage insurance in a 4-degree scenario, yeah, that's something probably outweighs the asset impact.
I'd like to come in, actually, if I may, on this, with possibly a slight challenge to Dominic as an insurance broker. One thing that we're seeing with the insurers is we're seeing huge emphasis on the asset side, you know, divestment and impact in investing and all that, which is fantastic. We're seeing some thought on the liability side with, say, property insurers not wishing to underwrite things due to floods and all that sort of thing. What we're not seeing is nearly as much positive action on the liability side as we would hope to see. So we're not seeing insurers say, look, we have got to develop products that are going to actively contribute to handling climate change, either supporting and encouraging adaptation, or almost more important, supporting and encouraging mitigation. So we're not seeing those sort of products come to market, and we're not necessarily seeing insurers thinking enough about the changing risk landscape and what that means for potential policyholders and potentially new types of risk they can be protected against, or new ways of protecting them against this changing risk landscape. So, I mean, I'd be very interested to know if Dominic, if you've got any thoughts on this.
Thank you for the left field challenge there. It's an interesting point, and it's something I will take away and think about. It's not something I personally have given a huge amount of thought to, which I guess is kind of symptomatic of what you're saying. I mean, from the very sort of specific area of insurance that I work in, I think I made the point in my presentation that M&A insurance is primarily focused on covering the transaction liabilities, as opposed to plugging the gap, so to speak, in the target's underlying insurance program. And that is often a challenging element of underwriting, where in due diligence a gap is identified, and the client tries to sort of roll into the W9 insurance policy that point, and that is not the focus of such policies. But I don't think it's hugely controversial to say that they are more specifically addressed through, you know, a bespoke focused insurance policy. And I take your point as to there's still work to do in the insurance industry to address those concerns.
Yeah, sorry, it was very unfair of me that. But
No, I welcome it. I like questions like that. I'm not sure how fulsome an answer I've given you, but yeah. No, it's interesting.
Good, thank you.
Great, thanks all for the good discussion around this question. We have 2 questions for Dominic. The first one is, who are the major players in the W&I insurance market space? And the second one is, what are the typical exclusion clauses on a W&I contract?
Sure. Okay. Major players. Well, it's the landscape has evolved very rapidly over the last, I said, 7 to 8 years. And if you'd asked me that question 6, 7 years ago, then I would have said there were probably around 7 or 8 key players in this space that we would typically go to, and they were a combination of large corporate insurers that people know from all sorts of lines of insurance, AIG, for instance, AXA, Chubb, and the like. There are also a number of MGAs, managing general agents, that underwrite sort of committing the capital of other parties behind them, whether from Lloyd's or from other entities. This has been a very successful area of insurance, and as a consequence of that, the inevitable market forces apply. It's got much more cheap, and there has been a flight of capital into the market. And so I would say that nowadays, here in London, in MEA, we would typically consider to be 20, 25 and growing insurers that offer primary insurance, and then others that provide excess capacity. And so you still have those large corporates, but there are an increasing number of MGAs as well. And they are still entering. Just in the last year, certainly in London, I can think of the likes of Everest, Berkshire Hathaway, names that you would have definitely heard of, have entered, and I suspect that's going to continue. Sorry, that was the first question. The second one was, forgive me, what was it? On exclusions.
Yes.
I touched on very briefly. Basically, exclusions can sort of fall into a number of categories. There are the so-called standard exclusions, those that you would generally see in any W&I insurance policy. These are often things that are just, everyone knows, potentially such high quantum losses, very difficult necessarily to identify during due diligence, that the insurers just don't have the appetite to cover them. Asbestosis, for instance, or defined benefits pensions underfunding are examples, or anti-bribery and corruption in sort of high-risk jurisdictions. You then have the sector-specific exclusions. These will be the exclusions that insurers will seek to apply on an individual basis based on their review and assessment of the sector in which the target operates. And this is something we dig into in that MBI process, understanding which insurers would seek to apply what exclusions. If there are particularly challenging jurisdictions, I mean, it's an evolving landscape and the appetite to cover these is growing, but it's still very difficult to cover, for instance, jurisdictions that fall pretty low on the corruption perception index every year. Gaps in the due diligence, that's often the most sort of negotiated point during the negotiation of the policy. If the insurer perceives that there is a gap in the due diligence exercise conducted by the insured, i.e. there are things that we know we don't know about, for instance, if it's a deal involving multiple jurisdictions and for whatever reason the client has chosen only to diligence certain of those jurisdictions, if there are material operations in jurisdictions that haven't been diligenced, they are likely not to be covered in the policy, and there will be a gap identified. I guess the only other point is the retention. There will always be a retention in the policy, i.e. a level of uninsured loss in excess of which the W&I insurance policy will sit. Either the buyer has that's to the buyer's account, or it may negotiate that the seller retains some liability in relation thereto. Clearly, the higher the retention, the cheaper the insurance, because of the impact on the risk profile from the insurer's perspective.
Okay, great. Thank you, Dominic, for sharing your experience. And so now we reach the end of our Canuk 2021 annual conference. And a big thank you to all the speakers today for sharing their insights, experience with our audience. Thank you very much. And so if for audience, if you have further questions, please leave a message in the WeChat group or send us emails to can.contact@gmail.com. You can also contact us via Eventbrite page. We'll receive the message, pass on your question to relevant people and provide you feedback as soon as it's available. Great. A huge thank you to all the speakers again, and thank you all the participants for joining our event today. Hope you enjoyed the event. We will see you in the next event. Thank you. Bye for now.
Thank you.
Bye-bye.
Bye.
Bye-bye.